Okay. Good morning, family. It's those who are here. Okay.
Good morning.
Yeah.
Good morning.
Yep. Good morning. So today we'll be talking about capital protection. And this is like the most important aspect of trading, right? Because if you do everything you do and you don't know how to protect your capital, then you're as good as gone. You know, I think I heard some of the growth traders say, whatever you risk, make sure you can attempt the same thing 100 times. So in essence, risking 1%. But trading is not really about risking 1%. Sometimes you have to go with your gut, right? You have to go with your gut to get those big wins. Even while you attempt to go with your gut, just there are some setups you see. You don't think about it much. You just go in, right? It happens. Yeah. There are some you need to overanalyze, you have to overanalyze, look into check this, check that, check this, check that, right? So, but the most important thing here is your capital protection. And how do you go about that? I'm gonna list everything for us here now. Because if you can get that right, then you are on your way. Just like I said yesterday, there are bad times in the market, but the goal is staying afloat regardless. Yeah, staying through the perceived bad times in the market, and you can only stay through these seasons if you know how to protect your capital. And the best way to protect your capital is simply, it is more like highlighting what I talked about yesterday. Your risk to reward, your risk to reward. Like what do we have here now? This is a 1:2, right? So I'm risking what I'm looking to make is like times two of whatever I'm risking on this particular trade. Yeah, I'm currently on this trade right now. What I'm looking to make is times two of whatever I'm risking, right? So I know, given time, yeah, even with a low accuracy, yeah, you can still stay afloat, right? So you have um let's say you usually risk your risk reward is 1:3. So for every $100 you risk, risks, you're looking at getting 300, right? 300 potential profit. I just look at profit, right? So now, let's say this $100, let's say you decided to risk 10% of your trade. Let's say you have a 1K account, right? Let me see if I can add that here. $100, one time, $1,000 capital. So to clear this account, all you need is 10 bad trades. All you need is 10 bad trades to clear your account, right? 10 bad trades. Now the question is, would you be so bad to take 10 bad trades? right? Now, some of the things that will help you here is knowing you can tell yourself, yeah, I'm only allowed to risk $100 per day. That means you're giving yourself maximum of what's it called? 10 days. That's if you are that bad, maximum of 10 days to lose your 1,000 capital. Okay. What I also believe is that every new day brings new opportunities. Yeah. The mental state you had in a particular day won't actually be the same mental state the following day, right? You might have had a really bad day or a really bad trading day, day one. Day two is going to be completely different. Yeah. And another good thing you do for yourself is to also always try to detach yourself from whatever happened yesterday. It's gone. Today is a new opportunity. Take on that trade. All right. You go in, see opportunities. If it's another bad day, in fact, if you hit stop loss again, fine. Now, coming down to you risking 1% per day, risking 1% per day, risking 1% per day. Okay, sorry, risking 10% actually. This is not one. Risking 10% per day. It's not left for you now to divide. How many trades am I taking in a day? What are the sessions I trade? What are the times I trade? Because if you can determine this, if you can get this for yourself, you don't just jump into the charts anytime. All right. You don't just wake up, oh, or you see you are passing through what's it called, X, and you see one trader saying, oh, gold will do this thing, USJPY will do that, or the war is causing this. You jump into your chart to take a trade. No, no matter what, right? So first of all, determine times you trade. Personally, I trade 6 a.m., right? And New York Open. Anyways, I would like to get your observation towards the end of the session. If you did observe what I told us to observe yesterday, all right? That's what I trade. I trade before New York session, sorry, before London session and New York Open. That's what I trade. Just these two times. In fact, sometimes I miss that of the New York Open because I might get busy during the day, all right? Aside from this time, I don't attend. Times I did, it doesn't always go well. Even if it does, it's not consistent. So I'll bet it's better for me to just avoid it entirely. All right. So back to risking 10% per day. Now, let's say you want to take just 5 trades in a day. So that keeps you at 2% per trade. Once you're done with your 5 trades in a day, you are done because you already attempted 10%, right? 10. Whatever the result gives you, keep it for that day. They say healthy trading habits is actually boring. It's so boring. There's no adrenaline rush. It's boring actually. But if you can keep to this, on the long run, you thank yourself for that, right? So let's say, okay, we've done taking 5 trades in a day. So automatically, you just kept yourself at taking 50, did I get that right? 50 trades to blow up your 1K account. 50 trades to blow up your 1K account, right? So you can see there are opportunities. Right? Now you can also determine, I'm just giving you parameters. Yeah. You can say during let's say you trade 2 times in a day, you trade 2 sessions. Your first session, I'm taking only 2 trades. My second session, I'll take 3. On my first session, I'll take 3. My second session, I'll take 2. Just like that. Like become a robot, right? Just say this is what I'll do, and you do it. This simple statement is so, so hard, believe you me. Right? But if you can keep that, you're good to go, right? So now let us say you had the week or your 10 trading days was not so amazing. In fact, you didn't even have up to 50% accuracy. Let's say you had 6 losing days and 4 winning days, right? So with 40% accuracy, with 40% accuracy. Now someone will say this accuracy is so poor. How can you say you're a trader and you're having 40% accuracy? That is poor. But that's where your risk to reward comes in, right? So with 40% accuracy, total loss, okay, should have this here. So total loss, total loss equals um $600. Yeah. You had, of course, you lost six equals $600. All right. Total win. We are using 1:3 reward, right? Total win equals, since you had 4 winning days and whatever profit you make is 300. You have one, two. Are you seeing this? So you're already up 6% on the account. What is 6%? Yeah. In fact, you're already up 60%. Are you seeing it? Your 600 is, of course. So total P and L, right? P and L, right? So you can see with having 6 losing days, you're up 600. Now imagine when you hit like 50% accuracy or even more, right? So this is the essence. Now imagine you lost yourself, like you allowed the emotions to get the best part of you within those 6 losing days you had. You must have blown your account now, right? So like I said, the good thing is to stay through the bad days. Really, there's gonna be bad days. In fact, last week was so messed up for me. You look at your analysis, it goes haywire. You look at it goes haywire. But so far this week, of course, you've been with me in some of the sessions. It's actually been good, right? So if I lost myself, maybe I had an account and I messed myself up, right? Now this same approach, if you trade prop firms, is going to help you as well, right? For prop firms, most prop firms do have 4% daily drawdown, right? So let's say you have let's say a 10K account, right? You can just stick to risking just 1% in a day, just 1%. There's no how, yeah, risking 1% per day that you hit your daily drawdown of 4%, that even hit your overall drawdown of, okay, you want to ask something, you want to ask a question? Yeah, just write it down.
Yes, concerning profit.
Yeah, no, just keep it down by
Okay.
in the next 10 minutes. I'll give room for questions, okay? Just keep it down. Don't forget it, please. All right. So you can see that. So with this, you're certain that you're good to go, right? Now, this is just one part of this capital protection, right? Now, when it comes to trading, right, that's what we call um trailing stop loss, right? So as the market is moving, you keep adjusting your stop loss, keep adjusting your stop loss, keep adjusting your stop loss. Some platforms like MashTrader, I think there are other platforms where you can trade. There is Trade Locker, there is MashTrader. Of course, you have the popular MT5. At MT5 doesn't MT5 doesn't have automatic trailing stop loss, right? Mass trader has it. Just set automatic trailing stop loss, and automatically it will keep trailing your trades. When there is a crazy pullback, it will just close. All right. But there's also what to call partial profits. Let's say you are, I think this is very trade. Okay, this was yesterday morning. That was a trade I took during the market open yesterday. Yeah, by 5:30. Yeah, the market did a pullback. I took a sell. I think along the line, my TP was actually one, yeah, around here, 133. But when the market came to 148, 147, that's 5147, I became a little, I did a partial close, right? I just need to secure my profit, just a little bit of it to reduce the risk I'm on, right? So imagine having an entry around here and hmm, I don't want to start explaining, but I just believe that I just believe, okay, yeah, of course, it should have been this way. This would have been the full trade. Yep. But I didn't wait for this whole move anyway. That was the crazy thing. I didn't wait for this whole move, right? My SL is not this big anyway. I didn't wait for this whole move. This little move here is like a whole freaking lot, believe you me, right? So I entered, I had like three entries, yeah. I was able to do some partials on some. Right? When just want to secure your profit, it happens. It took me a while to actually learn how to take my partial profits, right? Let's say you had your risk on the trade is 1%, right? When the market is like, let's say halfway, you can close half of it. So keeping you at 0.5% risk, right? At least you have a profit and you have a lower stop loss, even if the market goes against you. All right. So these are things you do that are going to help you. See, at the end of the day, yeah, they'll tell you no matter what you do, main thing is whether you made profit or you made loss, is your capital still there, right? There's what you call having a healthy capital even help you. See, risk management helps. That's how I tell people, yeah. No matter the account size you have, if you don't have any proper risk management, a 100K account will still seem like a $10 account to you. But if you think about it, everything's about risk. If you risk 50% on a $100 account in a 100K account, it's more like you're taking 50% risk on a $10 account, right? So that is just what it is. So it's not about the account size, it's about the risk, right? It's not about the account. At the end, it's not about the account size. I've seen people blow up 15K, blow up 20K, blow up 50K. You understand? Like it's nothing. All right. So the last thing before I attend our questions is I've talked about literally everything. The last part is what's it called? Understanding leverage. In fact, some brokers, if you trade prop firms, when you are funded, they kind of limit your leverage, right? Leverage is what you can do. Sometimes you see 1 is to 2,000, 1 is to 1,000, 1 is to 100. In fact, some prop firms will leave you at 1 is to 10, 1 is to 30-ish. Some good ones will allow 1 is to 100. So whatever if you have let's say 10K account. So whatever trade you're taking as though you have like times 100 of that account size. But your normal fundings, you can see like 1 is to unlimited, 1 is to 3,000. It is good, yeah. It allows you take multiple, let's say you can on a 1K account, you can take that's why if you see some of these videos on YouTube or on the social media, basically, you see someone flipping $50 to some crazy amount, right? These are like you're working with brokers that have like unlimited leverage. Understand? It allows you to take wholesome amount of trades. In the same way, it keeps the account at grave risk. You understand? We've seen that stuff when it comes to our news trading. Oh, you can your broker has like 1:3,000, and you max out your positions like mad. Then a little move of the news, like a little move of the candles against the direction, boom, you're taking out. But some other persons that have like 1:1,000, there are still some leverage for them. They are not risking as much as you do, and at least they still have um their capital with them, right? So that's just basically about it. So your question, Simi.
I wanted to ask that, do
Yeah.
you can you give guidance
Okay.
regarding prop firm trading?
Okay.
And do you have like recommended prop firms?
All right. Okay. 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 When you say guidance, what do you mean?
Because I think I did a trial with a prop firm once.
Okay.
So I understand that from my research that sometimes it can be difficult to understand their rules and regulation.
Mm,
And also, to if for someone wants to do prop firms,
mm,
someone have to meet with experienced people,
mm,
people that have like done it over and over again, so they can tell you which prop firm is good
yeah.
and how to give they also, if you can also give interpretation of
Mm,
the rules to trading, because they have their rules.
um,
The program that the first time I tried it, which is the first time I only tried, I had to use ChatGPT to understand their rules.
okay.
So since then I've been saying that I'm not going to do any other program until I see an
Mm,
experienced person, someone that has maybe done program over and over again and knows which program is good, and
mm,
also in accordance with the amount that I want to get, will give me
mm,
the interpretation of the rules, so that I can just like write it down, be looking at it every day. Okay, this percentage, this percent,
mm,
this amount, as per my amount, this amount is what this and this and this and this are the things that I need to do.
okay. All right. All right. Okay. Here's the thing, right? When it comes to pro firms, there are different firms. There are better ones. There are new ones that are trying to get into the market. There are other good ones, but their rules are so messed up, right? I have one, but the good thing is that, the bad thing is, yeah, I've got payouts from that one, right? But I wouldn't recommend it to a new trader, right? Their rules are so rigid that, you know, after trading with those rules for a long period of time, I cannot see it as a flex to trade other platforms with lighter rules, right? I also see it as a challenge, when you're with a prop that doesn't give you much room to trade. You just risk this amount, you're out. Then when you're with another prop that gives you, the liberty to do as much as you like, you get to overtrade. That's what I noticed for myself, right? But regardless, the best rules you can have in a prop firm is like the best rules you can have is 5 5% daily drawdown. I'm giving you the best rules. Yeah. 5% daily drawdown, 10% static overall drawdown. What does this thing mean? It means that if you hit 5% loss in a day, you've lost the account. If you hit 10% loss of the account in general, you've lost it. So what this first part gives is that you have a room to risk 5% in a day. But would you want to risk 5% in a day? There's no need for that, basically, right? You can stick to risking 2% in a day. That means
mm,
if you're so bad, you lose the account in 5 days, in a week.
mm,
Yes. But if you're so good, who knows? You can just pass it within a week or within a month, within 3 months, however the case is. Now, the second part, static. This is critical. Most, in fact, what traders fear most? Fears in prop. One, trailing drawdown. Plus, I'll put it as DD. Trailing drawdown. Number two, consistency low. Consistency low. Now, see, the thing is that, some people blame prop firms. Oh, problem is in the marry. The rules are there. It's left for you to
mm,
look it out. Last year when I decided to go into prop firm, I took it upon myself to go deep. You know, they might place just give you a set of basic rules. Those ones are the surface, but you need to go
mhm.
deep down, right?
The
So,
ideal role.
best thing I do is I go as far as asking I go to the customer care, right? Go, in fact, they have one thing about this proper account, they have what's it called? Well, let's say newsletters where they brought down articles. Okay, I'll call it articles of these rules, right? And there are so many models. There are instant funding models. There are two-phase models. There are one-phase models. There are so many models. So depending on the model you want to trade on any prop, yeah, go into that model, read everything about it. Okay. So what do I mean by trailing drawdown? Trailing drawdown is, let's say, if you hit, let's say you made 2% profit. Normally, for static, when it comes to static is that your overall drawdown is at 10%. So if you have a 10K account, you have you have a 1,000. In fact, before you hit your drawdown, you need to hit 9K. So you need to lose like pure 1K when it's static. You have a fixed overall drawdown. But when you are working with a prop that has trailing drawdown, that means they work with your highest amount, the highest profit you close on that account. So let's say you have a 10K account and you made 2% today. That means your account is at 10.2. So they calculate the drawdown. 10% of 10.2 is is I don't know how that calculation is. But one thing you know that is
1,020.
exactly. So the main thing is that your drawdown is no longer at 9,000. The curve is coming up with your profit. You understand? It's just like um okay, static drawdown is down here, but trailing drawdown, as you're making your profits, you're making your profits. This is how their curve is. Let's say you're making profits, you're making profits, you're making profits. Instead of your overall drawdown to be down here, overall drawdown is following you too. It's following you.
So your room for loss becomes more tight.
Yeah, exactly. So maybe sometimes you might be carried away. Oh, maybe I'm up 8% already. I still have like, oh, my drawdown should be at 9,000. Not knowing that your overall drawdown is following you without your profit. So you be more careful. Understand? So this one, in fact, you get to see this mainly on instant funding accounts, right? Instant funding accounts. It's not like it's not good. The only thing is that you just have to know it and know how to do your calculations. I traded with a prop firm. In fact, my payout or my first payout perhaps was from a prop firm that gave me not even 10%, that gave me 7%, 7% trading drawdown. So you can see what I'm at on a very tight share. Hey, there's no room at all. But I was able to work with that. Now, when it comes to consistency rule, some people tell you for you to get a payout, you need to maintain um to get a payout, you need to maintain let's say what's it called? You need to maintain 15% consistency rule. This is deadly. Some you see 20%. Deadly. So what does this thing mean is oh man, Jesus Christ. These are things you need to understand. You have a 10K account, right? With a 10K account, and you made a profit of, let's say, you made 5%, right? You made 5% profit. That's like $500. Consistency, 15% or 20% consistency rule means um your highest profit in a day. In a day, oh man, what am I doing? Your highest profit in a day shouldn't be more than 15% or 20% of your total profit. So let's assume you want to withdraw $500, yeah? But your highest profit in a day during that trade was 100. So if you take $100 and 50, mm, what if you divide it? $100 is like $100 is like 20% of 500 anyway, right? But if the prop has 15% rule, you'll be denied this withdrawal because $100 is more than 15%. Now you
Mm.
place your withdrawal, the prop didn't give you. Like, why did this prop? Why would prop deny my payout? But it's just their rule. So what you have to do now is to increase your profits, take it to like maybe 700 or 600, so that this your $100 highest profits will fall within 15%. Me, whenever I trade props with 50% consistency rule, I give myself 10% consistency rule. So I give myself in a day, let's say I want to make 10% of the account. Let's say I have the 10K account, right? I want to make 10%. I want to make $8,000, right? I tell myself I cannot make more than $100 in a day. So even if the prop want to do their magic, they'll say that I'm way, way below their consistency. So if I with my $1,000 profit, right? At my 10% highest daily profit, I am at 10%. So I'll still get my payout. All right. So these are the things that actually affect traders. In fact, this thing, it limits the amount you can make in a day, right? It keeps you at a part, I don't know, it's quite limiting, but if you can do it, you can do it, right? So another thing you get to see, I'm not going to talk about prop. Another thing you get to see is that you cannot lose more than 2% on an active trade. A trade that is running, you cannot lose more than 2% on it. As sometimes you see your trade will close. You're like, this prop is wicked. My profit that is running, they just closed it. Or I was in a loss and I know this trade will still go in profit. They close my trade. No, you're already sitting on minus 2% of your account on a single trade. Right? In fact, on a trade that is running. So automatically they close the trade for you. So that's why I said, just risk 1%. So you don't even put yourself in that situation. All right. So these are the things. In fact, I traded one that if you don't have a stop loss on your trade, they'll close it for you. In fact, I learned some core trading with that prop firm that there's no how I'll take any trade without using stop loss because I always feel that other props will be like that other prop. But I'm still learning to know that some prop accounts is not a must you put stop loss, but it's already inside me. You get. So these are these subtle rules. There are more. I'm just giving you ones that are glaring enough that people don't see, people don't even understand. Most people don't even understand this consistency rule. Understand? Most people don't. Is crazy. All right. So that's just it about it, actually. That's it about it. So, but however it is, there are good prop firms. There's good funded. There is funded Nest. There is FTMO. There is Marvins. There is Fifas. There are so many good prop firms out there, right? Like these that are worthy, that do pay out, not the ones that will give you stories. But at the end of the day, just understand their prop rules, follow it. You get your payout. It's that simple. People can complain all they want, but if you see most people that complain, they don't really understand the rules. And I don't blame them actually. Most people just go through maybe what they see on the first page. So drawdown, so profit, blah 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 blah. They're out. They don't now see the in fact some other problems you don't trade news. If you trade news, you breach the account. Some allow news. Some for you to trade news, your trade must be open before or more than like 10 minutes or 5 minutes before the news. If you trade within 2 minutes, boom, you're out. So these are so many things. Sometimes you might not even know. You take a trade, not knowing there is news active, they breach your account. That one is ignorance now. It's not from the profile. All right. So that is just it about it. Yeah, one good thing you do is whatever account or whatever prop, so you also draw for my screen. So whatever prop you go in with, you can enter my DM with it. I go in just or if I
Okay.
know about the prop, I can just give you some rules you need to look out for. Aside from the ones they give you at the homepage of the of the website, right? So
Thank you, sir.
yeah, you're welcome. You're welcome. So in this trade, normally now I might have actually taken a partial profit, but I want to leave it to run till, I'll leave it to run regardless. So anyways, that's it for today. Um, have a great morning. All right. Cheers.
Thank you, sir.
Yeah, you're welcome. You're welcome.